Hi everyone, and thank you for joining us for this first time buyer webinar in partnership with Catalyst New Homes. I'm Jade Turnstill from Share to Buy, and I'll be hosting today's session alongside Joe Farrington from Catalyst and Luke Jeffery from Meridian Mortgages, who will be taking you through the 9 steps of buying a new home. However, just before I pass over to our guest speakers, I wanted to run through some quick housekeeping with you ahead of the session. Firstly, our speakers are going to run through their presentation before opening up to a live Q&A session, which will last around 10 to 15 minutes. So if you have any questions for our experts, please pop them in the chat tool to the right-hand side of your screen, where you'll see an icon with a couple of little speech bubbles, and we'll get through as many as we can at the end of the session. It's also worth keeping an eye on the offers and file tabs on the right-hand side, as we'll also be sharing a couple of links and some downloadable content with you to engage with throughout the webinar. Today's session will also be recorded and shared with you, so don't worry if you happen to miss anything along the way. We'll make sure that you have access to the recording after the webinar has ended. And that's pretty much it from me for now. I'll be back at the end of the presentation for the Q&A, but in the meantime, I'll pass you over to Joe from Catalyst. Passing you over now, and here we are.
Excellent, thank you, Jade. So I'm Joe Farrington. I'm one of the area sales managers at Catalyst. So the home buying process, obviously one of the most exciting and important of life's adventures, but also can be quite an overwhelming thing to do and get started in. So hopefully today I'm going to be trying to break down that process into 9 simple to understand steps. As Jade also said, I'm joined today by Luke from Meridian, so I'm just going to hand you over to him so he can introduce himself.
Thanks, Joe. Hi, everyone. I'm Luke, and I'm the help desk manager at Meridian Mortgages. As Joe said, hopefully by the end of this, you'll all have a good understanding of the process, and we will make it as simple as we possibly can. And if you do have any mortgage-related questions at the end, I'll be able to answer them for you.
Excellent, thank you, Luke. So, as we just mentioned, that process can be quite a daunting one. But step 1 really is making that decision that it's time for you to buy. One of the main questions that I get asked whenever I'm speaking to a first-time buyer is, well, we've made that decision, so what's next? What's the best thing for us to go and do? And fortunately or unfortunately, it really does start with the finances. It's what's going to tell you what you can afford to buy. It's going to impact where you look or what you look for. It may also impact the sort of products that you look at using when you're actually purchasing a new home. And often at that point, when you start talking about finances, there's quite a few terms or jargon that gets used and thrown around. One of them being the deposit. So what is a deposit? And the deposit is actually the amount that is payable by you at the point of exchange, and it forms part of your completion contract. It's not to be confused with a reservation fee, which we will touch and discuss later, but is one of the common things we get asked if they're one of the same. The mortgage itself, what is a mortgage? And in its simplest term, it's just the loan that you're taking out to buy a property, the loan that you're taking out from the bank. The term of a mortgage, the term is just the amount of time that it's going to take you to repay that loan. And then also mortgage rate, which again, I'm not going to go into too much detail on, but the mortgage rate is often something else that can be quite confusing, but in its simplest term, that is just the amount of interest that you're going to pay on the money that you're borrowing. But as I said, really important to understand this from the outset. And I'll pass you over actually to Luke at this point to give you a bit more of an intro as to how we work with Meridian Mortgages and actually what they can offer for our buyers at this particular stage of the process.
Cheers, Joe. So just to touch on that, we've been working with Catalyst for several years now. We're their panel broker. In layman's terms, that means that we look after any qualifications for any of their sites. Okay. Our role is to get you guys into a position to get onto the property ladder, hopefully into one of their properties. All right. But what we do and what we're here to do is check your affordability, give you an idea of any costs involved, but most importantly, tell you how much it's going to cost you. because at the end of the day, that's what you guys really want to know. Now, as I said, we refer to the process as a qualification. And what we'll do is we'll take details such as names, addresses, incomes, outgoings to work out how much you can afford. And in the case of shared ownership, make sure we can tell you the biggest share that you can afford. Okay. Now, the end goal for this stage is to get what we call a mortgage in principle. Now, that's a credit check, and depending on lenders, it could be a soft or a hard search, but it will give us an idea of whether you will be accepted by a lender if we were to submit a full mortgage application. Okay. Now, at the end of all of this, you will have an idea of what budget you've got and also what schemes will work best for you. Okay, so you can move forward in your search for a property. What I will do though is pass you back to Joe, and he's going to discuss all of the different schemes that you'll have on offer.
Thanks, Luke. So now you've worked out the budget, it's time for you to look at your different options that you can actually use to get onto the ladder. If you're able to, then you can actually look at purchasing outright, and that basically just means taking out a mortgage on the total value of the property. But if that isn't going to be possible for you, there are a couple of other options. So you may have heard Help to Buy, and you may have heard of shared ownership. And what I'm actually going to do is go into a little bit more detail just to give you a really basic breakdown of what each of those products are, as they may be a more accessible way or an easier way for you to access the market. So Help to Buy, if we start with Help to Buy, Help to Buy is government backed. It's a scheme that does still help a purchaser buy a home outright. Through Help to Buy, you may only need a minimum deposit of £10,000. And then that is then topped up and supported by the government-backed equity loan, which is interest-free for the first 5 years. And that loan, if you're buying outside of London, can be up to 20% of the property value. If you're buying inside London, then that can actually be up to 40%. And then your mortgage is required on the remaining amount. For a home to be eligible for Help to Buy, though, it must be a new build and it must fall within the new regional price caps. So in London, that's quite simple because that's just a blanket £600,000 across the capital. However, for other regions, it is lower. For example, in the southeast, the cap is £437,600. And just to give you a bit of an example, you can see on the right hand side of the screen there, if you're looking at a property that is priced at £200,000, you need the 5% deposit. That's only £10,000 that you need to put down, with the 20% equity loan from the government, which is a further £40,000. That means the mortgage that you require is only £150,000, which is the equivalent of 75% of the property value. And then if we move on to shared ownership, you'll often hear this referred to as the part buy part rent scheme, and it allows you to purchase a percentage share of a property and then pay rent on the remaining portion. The minimum share that you can initially purchase is 25%, up to a maximum of 75%. And you only need a deposit and a mortgage for the share that you're actually purchasing. So it makes that scheme a far more accessible route onto the property ladder than buying in the open market. And again, just to give you a worked example, if you were buying a 25% share of a £400,000 property, your share is going to be the equivalent of £100,000. So that 5% deposit again that you need is only £5,000 now, and the mortgage requirement is only £95,000. So you can see how that makes, that is a completely different, or gives you a completely different option to actually get onto the ladder. As and when you can afford to, you can also purchase additional shares in the property. And that's for a process that's called staircasing. So as you purchase greater shares in the property, though, you do need to be aware that your mortgage is likely to increase. But on the flip side of that, the rent will decrease until you own the home outright, and then you don't pay any rent at all. So you've gone through that process, you've spoken to Meridian, you've got an idea as to what you can afford, you've now made an informed decision as to what product you're going to be using or need to use to be able to access the market. Now you can get into the fun part, which is really all about going out and starting to view homes and starting to see which ticks all of them boxes for you, which can be a really exciting task, especially if you're coming out to see one of the new build developments, and getting out to see some of the show homes that we've got out on site. So one of the key things that's really important to remember when we're going out or looking at which development, and there's lots of them out there, especially if you're looking across London at the minute, is to really identify what your must-haves are and your nice-to-haves. It's important to work out what really matters to you. So whether that's a spare bedroom that you're going to use for guests, but in the meantime, you're going to turn that into a home office, whether it's private outside space, so a terrace, a balcony, a private garden, or it might just be as simple as proximity to travel location, to travel, such as tube stations, that might be really important to you. And viewing a show home is a fantastic way for you to get a feel for how a new home is going to look once it's completed. At Catalyst, we use interior designers to decorate our show homes, which hopefully gives you a much better idea as to how a space could function or what you can actually use that space for. On the tour of a show home, though, it is important to keep in mind their must-haves we just mentioned, as well as your practical needs, such as storage space. We offer in-person viewings as well as virtual viewings for all of our developments now. So our sales team can talk to you via FaceTime, Teams, or over Zoom. And they can give you a tour around the show home so you can see it for yourself. And they offer, as well as obviously giving you an opportunity to see the product that you might be interested in buying, they also give you an opportunity to meet the sales team, understand the developer that you're speaking to, what the next steps might be to actually reserving a home, or just answer any basic questions that you might have. So you've gone out, you've viewed, you found something that fits the bill. It's now time for you to reserve. Now, reserving a home can be different depending on which developer you go to see. But typically it's at this point that you will actually pay the reservation fee that we mentioned earlier. And that reservation fee will take the property off the market whilst you complete the rest of your paperwork. Fees can vary when reserving a new home, but for shared ownership or help to buy, it's typically around £500. When you do come to reserve, there are a few documents you'll need to bring with you. So it's always handy to have them with you if you are going out with the view that, or you're going back for a second viewing with a view to actually securing a new home. So the things you'll need to bring with you are going to be ID, and that be 2 forms of ID for you and anybody else that's going to be purchasing the home with you. Proof of address, so utility bills or bank statements, they will need to be dated within the last 3 months, so handy for you to have them with you at the same time. That's just going to speed up that process from reserving a home and getting everything approved and then being able to move on to that next step. So once you've provided those documents and you've got the okay to move forward, it's then time to instruct your mortgage broker and your solicitor. I will give you a little bit more information on the solicitors and what they're going to do for you. But firstly, I'm going to pass you over to Luke, who's going to give you a little bit more information as to what Meridian or a mortgage broker is going to do at this particular time.
Thanks, Joe. Just as I'm just going to touch on what Joe said there. So with the documents, the good news is a lot of the documents that you have to provide to Catalyst are the same as the documents that you will need to provide for a mortgage application anyway. Okay, so we will actually send an email out to the client with a list of the documents they need. So you'll be fully aware of exactly what you have to provide, because there is a little bit of a difference. But the main things we'll want the latest 3 months pay slips for you. Okay, now if you are self-employed, it will generally be the latest 2 years tax calculations and overviews, depending on what type of work it is that you do. Okay. Then on top of that, we'll need bank statements, but rather than it just being within the last 3 months, we will need the latest 3 months to be able to work that out. And that's what we'd have to provide to a lender. Okay. On top of that, as Joe said, we'd need identification. And the other thing that we would need is a proof of deposit. Now, a lot of the time, your bank statements will cover that anyway, because if you've got it in savings, it will probably show on there. But if you are getting a gift from family, which is probably fairly common nowadays, okay, we would need to get a gifted deposit letter to send to the lender. However, we also provide you a template for that, so you don't need to go and make it yourself. Okay. Now, once we have those documents, that's when we can really go into the nitty-gritty with you. Okay. You'll actually be allocated your very own specialist mortgage advisor. Now, they will hold your hand the whole way through the process, basically to make it as simple as possible for you. Okay. But what they'll also be able to do is go through the different kind of rates on offer to you. Now, I'm going to briefly go through some of the more common ones for you. So I'd say the most common type of rate that most people take is what we call a fixed rate. Okay. Now, this is where your mortgage rate is fixed for a period of time, usually 2 years, but some lenders also offer 3, 5, and 10-year fixed products. Okay. And what that means for you is for that period of time, your mortgage repayment will be guaranteed and it will not change. So even if rates go up or they go down, it will have no impact and you will pay the same amount for whatever fixed period you take. Okay. The second most popular type is what we call a variable rate. Okay. That does what it says on the tin. It can change. Now that is based on the Bank of England base rate. So what that means is your monthly payment will go up or down depending on whether rates go up or down. So what you'll find is at the moment rates are really low. So you'll find that your monthly payments would be a lot lower. But if rates did start to increase, you'd notice that your monthly payments go up. Okay. Either is fine. Okay. And you don't have to sort that from the start, but it just gives you an idea of the type of options that you have. Okay. Now, what I would say is our advisors will be able to advise you on what's best for your situation. And the reason I say that is because this isn't a case of one shoe fits all. We need to tailor make everybody's case. Okay. Because what's best for one person isn't necessarily going to be best for the next. But what they will do is give you the advice on it, but you still get the final say on what you want to do. So you can choose how you proceed. Okay. Now, at this point, once we've got the documents and once you've gone through that information with our advisor, we will be ready to submit a mortgage application. Okay. Now, we do all of that, and also the reports and the surveys that would be done on the property are all carried out by the lender. So it isn't something that you guys need to go and instruct separately. We will cover it all for you. Okay. And what I will do now is pass you back to Joe. He's going to talk you through what happens when you appoint a solicitor and a bit about what they do.
Thank you, Luke. So we've put this down as step 7, but really step 6 and 7 should happen at the same time. It's really important actually you go ahead and you get your solicitor instructed at the same time as instructing your mortgage broker. And the reason being is the two need to run parallel. In most cases, when you're working with on it or buying a new build home, there's probably going to be an expectation or a deadline for you to exchange contracts. Typically, that's around 4 to 6 weeks, but with some developers, that can be as quickly as 28 days. So any delay in instructing your solicitor can make that process far more stressful and obviously less time for them to do the work that they need to do on your behalf to get you in a position to proceed. So what does a solicitor do? The solicitor handles all of your legal work that's involved with buying a new home. So they will be the intermediary between yourself, a mortgage lender, and the seller. They will oversee any contracts that are written up. They will also hand the transferring of money between all parties during the sale. They'll also conduct your searches. So very often at the start of the process, the solicitor will require some funds on account for you. I'm not going to go into the nitty-gritty of what the searches are, but the money that they require from you at the start of the process in most cases is actually for them to go and apply for your searches. Ultimately, though, they're there to help guide you and understand, or help you understand any questions that you might have about that legal process. So yeah, really important that you get them instructed quite quickly so they can carry out all of that work in a thorough manner for you. Or not that they wouldn't, but just so you've got plenty of time and it's not too stressful. So step 8, it's time to exchange. So exchanging on a home happens when copies of the signed contracts are changed hands between the buyer and the seller's solicitor, and it's at this point that both parties commit legally to the sale and the purchase. It's also at this point that the deposit we discussed earlier will need to be transferred. But before you exchange contracts, there are a few things that you need to have agreed. Firstly, you need to ensure that you're happy with what is included in the contract, and ultimately all of your questions have been answered. And if the property is build complete, you have agreed an actual completion date, an actual moving day. If you do have a fixed completion date, your solicitor will notify the lender when you exchange contracts, so they can ensure that the money that is required from your mortgage is ready and on account, ready for the day that you actually complete and look to move home. This is also the point in which you can start talking to removal companies, arranging utility bills, but most people will also think about the more fun part, which is actually ordering new furniture, or deciding which room you're going to be decorating first. You will also receive a call from if you're buying a Catalyst home, you'll receive a call from one of our aftercare team to arrange a home demonstration with you. And that means they then get an opportunity to walk through the home with you. And again, they'll do that virtually or in person. And they'll tell you how everything works, from the dishwasher all the way through to your heating controls. So in normal cases, if you're buying a home that's already built, you're probably looking between 10 to 14 days from exchange to completing, and that completion is the final step. That is the moment that you get your keys. That's the hurrah moment. That's when you also officially become new homeowners. So congratulations when you make it that far. And I hope you've enjoyed, and we've managed to make that sound as simple as possible for you. But now we've gone through that full buying process, I also wanted to showcase some of our latest developments, and hopefully that can help inspire you to get your property journey started sooner rather than later. So in front of you, you should now see a map of some of our London developments. And we've got a range of new build homes across the capital that are available through shared ownership. There are also, some of them are available to purchase using Help to Buy. And I've actually got a quick tour of one of our latest developments, which is the Switch in Wimbledon, where we've got a range of 1, 2 and 3 bedroom apartments that are all available through shared ownership. So I think the Switch is probably one of my favourite marketing suites and show flats at the minute. So if you're looking in that area, definitely get out to go and have a look at that one. Next, we've got our counties developments. So we've got a lot of lots of developments outside the capital as well. There's a particular focus on those home counties and Oxfordshire. The lanes in Houghton Regis is one of our latest developments where we've recently released and launched our new show home. Here we've got a range of 2 to 4 bedroom homes that are also all available through shared ownership. And we've also got a quick preview of that development for you. Excellent, thank you. So yeah, thanks again for joining us this evening, and I hope I've been fairly clear and we've managed to make that process of buying a new home sound as simple as possible. We can't remove the stress completely, but hopefully if you follow some of them simple steps, it will make that process of buying a new home a lot easier. So I think we're now going to go back to Jade to start some questions and answers.
Absolutely. Hiya. We're going to grab Luke back as well. Thank you so much, guys. That was really informative, answered loads and loads of questions, and I think you've probably helped a lot of people. And I can see that from the amount of comments coming through on the Q&A in the chat. So we're going to jump straight into it and get through as many as we can. Like I said at the start of the session, we're going to do about 10 to 15 minutes of the Q&A, and then we'll have to let these lovely fellas go and enjoy their evenings. But we'll jump straight in. Lots of mortgage questions. So Luke, we'll start with you. We have, what is the minimum income required to obtain a mortgage? How much do I need to earn to qualify?
It really is a difficult one to answer that precisely. The reason for that is there is no minimum as such, but obviously what we have to factor in, if you're looking at a normal mortgage or shared ownership or help to buy, you're generally capped at about 4.5 times your income. Okay, but then if you have any loans or credit cards, that also gets factored in. So if you were doing a help to buy case, for example, there's no rent to pay on it or anything like that. And let's say you have no debts and you earned £20,000. Yeah, you could generally get 4.5. So you could generally get a mortgage of £90,000. If you earn £40,000 and so on and so forth, times it by 4.5 and you're pretty much there. It is a little bit different if you have loans and credit cards, because if you have those and you're not paying them off, that also gets factored in. Okay, and then shared ownership is a little bit different because you do still get the 4.5 times income, but what you've got to bear in mind is you also have a rent and a service charge to pay generally, so you also have to take that into account. Now, generally, that's the point of the qualification. I would never say don't do a qualification, even if you don't think you earn enough. It's going to tell you what you can afford. And I've seen a couple of the questions where, can you buy on the open market as well? Yes, you can. Okay. So it's a case of, if you're not quite getting up to that purchase price, what we will be able to do is tell you what purchase price you can get up to. Okay. So it's never a wasted conversation.
That's brilliant. And I think that's really good for people to know, just reach out. And, it doesn't mean it's not possible. It just means weighing up your options and kind of looking at exactly that, looking at shared ownership, looking at help to buy, looking at those alternate schemes as well. So that's really good. Thank you, Luke. Over to you, Joe. Someone's asked, how long does it actually take from first inquiring about a home to actually moving in? So the full process.
I think that depends.
To you, Luke, can I buy a home with a bad credit score, and how long does it take to build a good credit score? A bit of a two-parter there.
Yeah, so first things first, yes, you can. I mean, nowadays there's over 100 lenders that you have access to. And there's clearly been a gap in the market for people that don't have the cleanest of credit histories. Okay, there are lenders now that we're using daily, and they're becoming more commonplace, especially with the pandemic. It's been a little bit harder for people to keep up repayments, and there are options there. Okay, what I would say is it always stays on file for 6 years. So if you have a default or a mispayment, it's going to show for 6 years from when it happened. So if it was to happen today, it's going to show on your credit file until April 2027. So they do stay on for a while. But what I will say is a lot of lenders start to ignore them, or they're more lenient on them after 2 to 3 years. Okay, so specialist lenders will generally do it. If it's over 2 years ago, they're pretty flexible with it. Some of your mainstream lenders are pretty good, but they probably want it to be 3 years. But there are options from day one. Obviously, depending on what it is, we'd need to see the credit reports. But again, we can always get a copy of the credit reports and then give you a clearer direction of where you need to be.
Brilliant. So it doesn't rule you out. And I guess I think there's a lot of fear around bad credit, that, it just writes you off. But actually, I think people need to remember that that's not the only factor taken into consideration with the mortgage side of things. There's all the affordability checks, like you said. So actually, if it's not too bad, you could still very easily get a mortgage, but it's just all about case-by-case basis, speaking to your broker who can kind of liaise for you and figuring out the best options there. So that's brilliant. Thank you.
I mean, just touching on that, guys, it's a case of everybody thinks their credit is really bad. Even if it's not that bad, trust me, we've seen some cases that you would class as bad. And there's some people that think missing a payment or missing a couple of payments is really bad credit. It's not. It will fly through. And we've seen multiple defaults, CCJs, ex-bankrupts. Yeah, we've been able to get mortgages for all of those types of people. Don't ever not ask, because if you don't ask, you're never going to know.
I think that's probably settled a lot of minds, actually. So thank you. That's really good. We'll pop back over to Joe on this one, although Luke, you might have something to add as well. But if my name is on another mortgage, am I still able to go for a shared ownership property, or does my name need to be removed first?
Very simply is you need to be in the process of having that removed or getting yourself off of that other mortgage before you can be in a position to purchase. But as long as that's in the process or in motion, you can still be eligible to reserve one at that point.
Just to touch further on that, so yes, you'd be able to reserve. However, you would have to be completely off before you could complete on the new property. So let's say it was a July completion, for example, so 3 months' time. As long as you're off of the property by July, it would be fine.
For example, like another buy-to-let, or be down on the mortgage for another property, and that's either the UK or abroad. So you don't have to be a first-time buyer, but you can't currently own another home at the same time as shared ownership. So just bearing that in mind, if you're in line to put your name down on someone else's property, that kind of thing. Just keep that in mind for yourself.
Yeah.
And with Help to Buy as well, you have to be a first-time buyer, so that does differ slightly. If you owned a property 40 years ago, unfortunately, you wouldn't qualify for the new Help to Buy scheme. But it's always worth having a chat to see whether you can do shared ownership or whether we can do something without either scheme.
Perfect. So many questions coming in. Thank you so much. I'm skimming through them as I go. Luke, we'll go back to you for this one. You mentioned the extra evidence required, but does being self-employed actually affect your chances of getting a mortgage?
No. What I will say is COVID hasn't been particularly kind to self-employed people. In regards to this, a lot of it is going to be dependent on what government grants you've taken during the pandemic. Okay, being self-employed as a whole, no, doesn't impact it. However, we know some people's accountants can be very clever with how they show people's income. So what I will say is we can only use income that's been declared. Okay, so if you're being particularly tax efficient, that can leave you coming a little bit unstuck when it comes to obtaining a mortgage. But yeah, with that, it's a case of there's been 3 government grants so far. If you've taken the first 2, most lenders are generally okay with it. If you've taken the latest one, that's where there's been a few hiccups, because generally you had to prove that your business was not in good shape to be able to take the third one. So most lenders, I would say, have kind of said, if you took the first two, you're still eligible. We'll still use the latest 2 years tax calculations. However, if you've taken the third one, probably not. And I know there will be probably people in the chat that are self-employed hairdressers and things where you haven't physically been able to open. That's generally getting relaxed a little bit now, because hopefully you'll all be able to open from next Monday. Lenders generally want you to be back at work, and then they'll use your previous figures as long as you didn't take that third grant.
Great, loads of good information here. Again, I think all this is just helping so many people, because it's been a tough year and there's light at the end of the tunnel. So we just need to get people there and get people into houses. Right, so many questions. I'm just trying to pick out ones that we're getting quite a lot of. One for you, Joe. If you buy a shared ownership home that isn't a new build,
or what the eligibility will be on purchasing that purchasing that shared ownership property.
It will be house specific. Okay, so some of them will work like new builds in the sense of they will allow you to take 25 to 75%, and you might not necessarily need to buy the same as what the previous person had. So they might have had 70%, but then they've sold it. If you can't quite afford that, it's going to be down to whichever housing association is dealing with it. So what you need to do is speak to the housing association, and they'll give you an idea of whether you have to have at least 70% or whether you can buy between the 25 and 75, as Joe said earlier.
Fantastic. And then another interesting question, so probably one for you, Luke. Who is currently lending on shared ownership homes? Will I be able to get a shared ownership mortgage from any bank?
So any bank, the answer is no. Okay, some lenders don't do shared ownership. However, what I would say is the vast majority are starting to come on board. Most of your mainstream lenders will generally do it. I know I've seen in the comments that Virgin weren't doing it on some. They are now starting to do it on some. But it's a case of not every lender does it, so I can't say that they do. But we still have probably 30, 40, 50 different lenders that we can look at that will do shared ownership. So it's becoming a lot more prevalent, especially with the changes in Help to Buy and with the situation people find themselves in. House prices have shot up through the roof. Not everybody, especially London, where these guys are based, not everybody can buy a 5, 6, 7, 800,000 pound house or flat outright. Shared ownership's becoming massive, and it's becoming a norm. Whereas I think previously it might have been don't really know much about it. There's not that much about it. It's definitely coming to the forefront now. And as you can imagine, that means more lenders will jump on board because they don't want to miss a gap in the market.
Great. Another question we've had is, would I have to use the provider's recommended solicitors or mortgage advisors? So this is probably one for you, Joe.
Yeah, I'm sure Luke will probably may have some comments on it, or may have helped somebody else buy on that site previously. But also, one of the things to try and remove from this process, or we try to remove from this process, is the stress. And sometimes that's being too involved in that process. And because we've got a working relationship with with the providers that are on our approved panel, it means that we can go to them, we can go and get the updates that we require to understand or to assist in moving that purchase along. When you're using somebody that we don't have that working relationship with, sometimes they don't necessarily like the idea of speaking to us, because they act on the buyer's behalf. So giving us information isn't something that sometimes they're not that forthcoming, which means we then have to come to the buyer to ask for updates or to go to their solicitor for updates. So generally speaking, it tends to ease that pressure or that stress or that involvement from the purchaser on that side of things when we need to get updates.
I mean, Joe pretty much hit the nail on the head with that one. Stole my thunder a little bit. Yeah, it's a case of, because we've worked with them, and also if you're using panel solicitors and brokers, as you can imagine, we generally work with that builder every single day, 7 days a week. It generally means we also work with that solicitor 7 days a week as well. So it's a case of The flow and the quickness, you generally find it goes a bit quicker because we already know how each other work. It's not a case of you have to pick it up with somebody you've never spoken to before. Myself and Joe speak every week without fail. Same with the panel solicitors, because we've got that relationship. So I'd say the biggest bit of feedback we've had from clients in the past is it takes away that hassle, because the last thing you want to do is you're at work or you're eating your dinner and you have a sales negotiator saying, where are you at with your case? Well, unless your broker's kept you up to date the whole way through, you might not know that. So you might have to do the chasing with them. Joe and Catalyst will generally ask us that question, so you can eat your dinner in peace. So it is really that simple, to be honest.
That's all we want, just to eat in peace. That's all anyone wants.
Eat in peace and a simple process. It's also worth just pointing out as well that,
so I'll chuck this one out there. It's quite an interesting question. So my partner and I are in a civil partnership but living at 2 different addresses. Could one of us buy through shared ownership as a sole buyer as long as that person's income is below the £80,000 threshold?
Do you want me to answer it, or do you want to go?
No, I was going to blame Jade. She said she'd only ask us easy questions.
My fault.
But no, Luke, I'll let you jump in on that. You look ready to answer.
Yeah. So in regards to that, it's a case of if they're going to live in the property with you. On shared ownership, you have to declare everybody that's going to live in the property. Now, if obviously in London, the cap is actually 90,000, outer London is 80,000. However, if they are going to be living in the property, you should declare it. And if you do, and it's over that threshold, unfortunately, it wouldn't be applicable. What I would say is if you are living at separate addresses and you're going to continue to live at separate addresses, yes, you can do it in the sole name, and as long as your income's under 80,000, there would be no problem with that.
Perfect. I hope that answered your question. That was an interesting question. That was a really good one. Right. How has the process changed since lockdown? Do I need to visit in person to reserve? So say at a Catalyst development, Joe, would they need to be there in person?
No, absolutely not. And I think, since the start of lockdown, we've really accelerated our digital offering. So it's possible for you to reserve a home completely from home without ever coming out to site now. There's lots of digital resources to help you with that decision-making process and to ensure you're as informed as possible. So things like your virtual tours, the show home videos, the development fly-throughs that you've seen. And also that the sales team now are fully set up to be able to take appointments through things like FaceTime, WhatsApp, Teams, Zoom. So if you don't feel comfortable doing so, that you don't have to visit. Although it's great, we are still open for business as normal now. On all of our developments, all of our sites are open. It is by appointment only, and there are obviously some additional health and safety measures in place, which the teams will actually, the guys will run through at the point of booking a viewing, and we'd still encourage everyone to come out and see us when they're comfortable and if they're comfortable doing so.
Fab, it's a digital.
Do it 3 months prior to you starting. In that circumstance, what you would need is a copy of the contract, and it would need to have your salary on it, and it would need to have when the start date is. Okay, so for example, you could be starting a new job in June. As long as you've got a contract which shows what your basic annual salary or hourly rate, if it's hourly rated, is, and it shows the actual start date, there shouldn't be a problem with that. And there are a number of lenders that will do it. There are other lenders that need one pay slip or will do it from the first day you start the job. To tie in with specialist lenders, generally, they will want you to have passed probation. So again, that could be 3 months, but there are options for near enough everybody. And that's what we can go through with you. So it's worth going through that chat, because a lot of people think, oh, I've not been in it 12 months. I'm not even going to bother. I'm going to wait until I've been doing it 12 months. Well, unfortunately, guys, 12 months time, that property is probably going to be another 20, 30, 40,000 pounds. So it's probably worth asking straight away to save yourself that money.
That's
Congrats
brilliant.
on the new job as well.
Sorry, Joe.
Congrats on the new job as well.
Absolutely. Yeah, we have a couple of people. I think a lot of people are in that position, right? Where after all this time, new jobs are cropping up and stuff, and it's great. And it's good to see that kind of progression and like exactly that light at the end of the tunnel. So it's good to know that, you know, they don't have to wait that 12 months down the line before trying to get on the property ladder. So great work there. I think we're going to have to call it a day there because we've had you guys talking for so long. But thank you. You've answered so many questions. It's been amazing. What I am going to quickly do is just pop up here we are, a slide on screen with the URLs for both Catalyst and Meridian Mortgages in case you'd like to find out any more from them after today's session. That's pretty much it for now. So I just want to say a massive thank you to both Joe and Luke for joining me today. You've done a really great job, answered loads and loads of questions. And also a massive thank you to everyone in the audience who's watched and asked questions. And we hope you found the session useful. If you'd like to be kept up to date with any future webinars, you can create an account with us at sharetobuy.com, or you can keep an eye on the Share to Buy accounts on Facebook, Twitter, and Instagram. And I'm also going to pop up another interesting link that we have at the moment. So if you're interested in finding out more about shared ownership, Help to Buy, and the buying process, Share to Buy are actually hosting the London Home Show on Saturday, the 24th of April. So it's going virtual for the first time, and the event is completely free to attend and will play host to many leading housing providers, including Catalyst, who are one of our sponsors, as well as mortgage brokers and solicitors on hand to answer more of your questions. So if you'd like to come along, head to the link on your screen now to book your free tickets. And that's pretty much it for me for now. But thank you again, and I hope you enjoy the rest of your evening. Thank you.
Thank you very much, guys.
Thanks, everyone.